Hi, this is Jeffrey Kurt Financial Group. Today's Monday, January 5, 2026. We're back at it. Start of a new week, new year. Happy New Year. So what I wanted to do today was kind of review what happened in 2025, point out a couple of things, and I think, they may apply or at least give you something to think about as we tackle the markets in 2026. So last year at the end of the year, it was a good year. Dow was up about 13%, S&P up 16%, NASDAQ led the way up over 20%, Russell was up 11%. Russell, better performer in the second half of the year, and that may continue into the new year. In the fourth quarter, the Dow led the way, up over 3%. NASDAQ and S&P 2.25%, 2.5%, and Russell less than 2% gain. Again, it looks like it was a really good year, but I want to point out that we started the year similarly as we are in 2026, market performing well. But then in the February to mid-April timeframe, kind of motivated and scared of the tariff changes, the stocks lost over 20% in about 6 weeks. All the fear about tariffs, we're going to double-digit inflation, the economy is going to crash, and all this bad news, which turned out to be quite wrong, that the market did have a huge sell-off, again, February, March into the beginning of April. Then from there, a nice rebound. But, as we went through the year, there clearly were some risky areas. August, we had a significant sell-off for about 2 or 3 days. In October, we had a one-day 1,000-point Dow dip. And then it just bounced right back. Same thing, beginning of November, sell-off and then recovery. So a lot of volatility kind of masking some good numbers for the year. As we look forward, I think there are some reasons for optimism here in the first quarter. Inflation is probably going to be coming down. We're probably going to get some interest rate cuts. We're definitely going to get a new chairman of the Federal Reserve at some point in 2026. And there, is some expectations, even a cut here later in January, and that's going to help. And then corporate earnings are set to be pretty good, especially as compared to the first quarter of 2025 with the tariff scares and all that. So again, the market is set up, I think, to begin the year, pretty strong, and we'll see. But again, as we look back at 2025, who expected the tariffs to have that much of a significance in a drawdown? And the same thing could happen this year, a geopolitical thing, oil, the budget in Washington not getting done, or some other, geopolitical and or political things going on could disrupt the market. So again, I think there's a setup for a pretty good start to the year, but that does not take away from the risks. And I didn't even mention the overvaluations, the concentration, and what looks to be an AI bubble. These things could continue. They did continue throughout 2025 and can continue. But again, they are, one of the several risks that are out there. Thank you for listening. Good luck this year. Let us know if we can help or have any questions or suggestions, and we'll be back on Wednesday. Thank you again. Goodbye.